Hello and welcome. Let's explain this chart with the orange line representing Bitcoin, blue line representing silver, and the mathematical calculation for silver in the blue. I'm taking the highest daily close that I can find over the last 3,000 trading days. That represents close to 12 years. When there's about 250 trading days a year, subtract weekends and holidays. And then I take the difference of the two and I divide it by the minimum low, basically getting a percentage number. So 0.8 would represent 80%. 2.2 would represent 220%. When you see the numbers up high and big, like the 46 and the 128, we'll just put like a X for that level. Because Bitcoin, well, that's got the much higher volatility. So there's some things worth note on this. So with silver, again, 12-year differential in price. Bitcoin, I'm doing less of a time frame, 100 weeks. So 4 weeks short of 2 years, or about 23 months with the highest and lowest prices. Of course, Bitcoin more volatile. This is from its infancy days, as this is starting back in May of 2012, with each one of these lines in orange representing a week, and in blue, this is starting in the late 1970s, basically in 1979. And each tick represents that of 30 trading days. That would be about a month and change. So some of the things worth noting is, again, much more volatile moves. To get like a 200x gain in under 2 years in the early infancy stages, well, that happened. I don't expect that to ever happen again with this market, with the Bitcoin against the dollar. In fact, this number might be, it might, you know what, it might be broken. Well, I got other charts that's going to be talking about major gains. But also within such, let's just take a look at how, and this wasn't designed to be such, how they almost go down together. And the reason why this goes down is because of reduction of stale data. So after more than 12 years go by, because that's how long it takes to remove the high. So as you get past 1992, this would start to go down. But even in here, it got rid of the stale low data on silver, because it was over 20x differential. And then it was working with a low, but of like a couple bucks. Then it started to work with lows of $3, $4, $5, because the earlier days from the early 1970s were taken away. So that's part of the mathematics within it. Same thing with Bitcoin going down. After about 2 years, it would remove these $1,000 highs. But they were both going up, and it worked out that these lines go up around the same time. But notice in here, silver gets to 50, stops going up. Bitcoin gets to 1,000, it corrects for a bit, then it goes up further. Okay. And then that's just basically how it went. Both markets are traded differently, and it is what it is so far. So that's enough of this chart. Let's take a look at Bitcoin. From its infancy, a line logarithmic 10 scale, or a 10 log chart. And I'm saying 10 log because each one of the lines represents that of a 10x move. I don't have dates on the bottom of the screen. It's a weekly term time frame. So there's been over 400 weeks since the trading of Bitcoin has been born. The trading started at under a dime per coin, and it stayed there for several weeks. And then in here, it had its move. How long did it take to go up on a 10x scale each time? Well, the first one, this long. Second one, not quite as long. Third one took longer because of the correction. We're going to talk about corrections next. Right there. Next one didn't take as long. This one took the longest. And I'm not going to say it's going to be easier for this one to happen quicker, but it's got a long time to reach the next one. Of course, that's 100,000 in here, and that's $1 million at the highest line shown on the scale. Now let's move into the corrections. And I don't want to talk about the very quick ones. This one I'm going to avoid. This one will be avoided. This one will not be avoided. Any of these little bit like this sideways correction I'm going to avoid. This one will not be. Obviously this one is the biggest. And we're doing so because we're talking about the current one. So these are the corrections down Bitcoin has had. I don't want to talk about this little small down move. And I mean, those are smaller term, daily chart correctionary moves. The first one, this is where it went up basically like instantly fast from under $1 to over 10. It just continued to go up week after week after week. It closed at higher prices consistently. And of course, greater than a 100x gain. I was watching Bitcoin at the time, amazed, marveled, magnified by the situation. Of course, I was not invested or trading or playing the game in any form, but I was most certainly aware of the situation when I had subscriptions to YouTube channels like Da Vinci J's channel and Brother John F, as well as Max Kaiser with via Russia Today. I was hearing about that kind of stuff, although I don't remember Max Kaiser talking about it in 2010. However, that was its rally higher, its correctionary move. Basically straight down in here, lower highs, lower lows. That's how our current one started. Except it's managed to have a little bit of sideways over the last little bit of period. So really a little bit of a comparison there. And the next one, which is a double time correction and a single price correction. And also the market went straight up for, well, the second of 3 times basically, because it went straight up from here to here, sideways, down, and sideways. So the length of time for the correction was long enough for me to count it within such, when the length of these ones, yeah, these ones are just minuscule. So as far as how long it is in comparison, let me just do a measure to do such. And what we'll do is we'll take a square box. This is how long the correctionary move was from the top. And let's move it in here. So it's getting close, not much longer to go to the amount of time and which resembled this. Of course, this one corrected more sideways than this one has, but it's been going sideways for the last little bit. And then now the big correction. And maybe in comparison, you can say, well, it's starting off the exact same way. You go down like this, you go down like this, then in here you go sideways a bit before another down move, and then one more sideways consolidation. And the uptrend had consistent higher lows from after this point in here. And that might be the case. If it were to compare it, I'm not going to draw a comparison of how much longer it's got to go, because we're going to talk multiple years before we'd be talking about not only 100,000, but going back to close to 20,000 again. So those are how those corrections played out. The volatility looks like it's not doing much now compared to then, and that's true. The size of the moves that were being made during the Mt. Gox era, in here, size of these moves, compared to all the moves since then, well, you can see the lines don't go up and down quite as fast in here as they did back before. Well, that's normal. Market's new, not as many participants in it. Obviously, the market cap being much lower, and everyone disses Bitcoin. Oh, it can't be money. It's not stable. Its price isn't stable. It's got to earn stable. Just like respect, you got to earn respect. And how do you earn such a case here? Time. So during stage 1, volatility was extreme. And then it reduced a little bit. Let's take a little bit of a little bit of a look at volatility, because volatility in here is much bigger than it was during the correctionary phases, and that's going to be normal. When markets go sideways like this, your moves are smaller than they are during the up moves. So let's insert the volatility chart, and what we're seeing within this is that on every single day against the price of the US dollar, that the average move from the highest to the lowest price is currently in at a little under 8%. There has been, well, I'm using the last 1,371 days, or going back to 2014. And before, I was magnified and impressed by, oh my goodness, in here, this was trading at 2% moves per day on average. It had very good bullish setups in what was, of course, still in the neutral phase, because until it was able to get towards and breaking past the highs that it had from the 2013 time frame, then it was in that correctionary phase, just as Bitcoin's going to be as long as it stays in its, well under 15,000, same thing. So we've had lower volatility lately because, well, I mean, we're not having the major upruns anymore. Market's just in a correctionary move, and that's just it's gonna go back up higher again for volatility when you have up moves. But on the long face of time, or the long duration of time rather, it's going to be lower. So I'm going to take a look back at the price chart. For Bitcoin to get anywhere up towards these levels, it's going to probably take some time. And if it doesn't, the volatility would take some time. But if it takes a decent amount of time to get up here, let's just assume 5 years, 6 years, and I'm realistically saying that's a long period of time in this crypto space, but we're only going through 400 weeks so far. 6 years is 300 periods. But it would be at a point where I would think we're seeing moves now where 5, 6, 7, 8% volatility is normal. Well, then we would start to see lower numbers than that, 3%, 2%, 1.5% becoming normal, if it can earn that of price stability. And when more people get into it, that's how you earn such a decree. I'd like to thank you for tuning in to this evening's video. And have yourself a magnificent day. Bye-bye.